Hi guys, welcome to Ways to Fatten Your Wallet. This is a quick talk on reasons not to sell a stock. It's often hard to know when to sell. You might figure out when to buy, but then knowing when to sell, is it going to go up, is it going to go down, should I keep it for a bit longer, should I buy more? Knowing when to sell is quite difficult. So we've got some reasons, some common reasons here. Often if you've bought a stock and you've stuck with it for 6 months, a year, 2 years, 3 years, and it's gone up, you think, now might be the time to sell. If it's gone up, especially if it's gone up by 40, 50, 60%, you might be convinced that it's going down, or it might not continue going up. This happened to me. A stock I bought went up by 60% over 2 years. I sold it. It later doubled or tripled, actually tripled in 5 years. Same thing happened to Warren Buffett. He bought Geico, the company now owns fully, and it went up by, he invested $10,000. It went up by 60%. He sold. Later on, years later, he regretted it completely. He could have bought more stocks cheaper, and in fact, the company did really well over the long term. But anyway, he eventually ended up buying it. That's another story entirely. Second reason is I've hit my target price. That's a bit similar to selling because it's gone up by 50% or something. But some people have a price in their mind, and they think I'm going to sell when it hits X or Y price. That's not enough that's not a good enough reason to sell. If it's still a good business, if it's still a good stock, you should probably stick with it. You shouldn't just have arbitrary figures of prices. If you're buying for the short term, maybe these videos aren't for you. Really, this is more for people that want to make more money from stocks rather than quick bits of profit here and there. The PE is too high. Often, if a company does well, the PE ratio is just a metric that a lot of people use. It's not the holy grail. And it changes over time, obviously, when the price goes up and down. I've got another video on PE ratios called why the PE ratio can be misleading. It certainly can make it difficult not to know when to buy and sell stocks, and it's not a good reason to sell a stock if it's if it's got a high PE. It needs to have more than that, really. Macro reasons, this is something that scares people. They read things in the newspaper, they read things, they see things on TV. If there's a war going on, a crisis, a food shortage, they think that might affect their stocks. They're getting worried, they think the stock market might go down. If you're a short-term investor, do what you want. If you're interested in long-term investing, it's probably not going to affect individual stocks in most industries. So I wouldn't worry about macro, especially if you've got good companies that can withstand the peaks and troughs of recessions, etc. The directors are selling. I've bought and sold companies based on what the directors are doing. I don't think that's the best way to do it. If you've got a stock and you like the stock, if the directors are selling, they could be selling for a lot of different reasons. They might want to buy a house. They might want to diversify their portfolio. They might be doing for tax reasons. We don't know. The point is, you shouldn't be making stock decisions based on what other people are doing. It can't go any higher. This is the most important here. I think that if you've held the stock for a long period of time, maybe it's doubled or tripled, you've done really well from it in a short space of time. You might think, well, it's not going to go any higher. You look at the stock chart and you think it's already done this. What more can it do? The best way to illustrate this is to show you an example. So if we just go over here to the computer screen, I don't know if you can see that. Can you see that? Let's get that zoomed in so you can see the screen better. There we go. So this is a stock chart, and that's another stock chart in the background, that's someone else. But this is a company, this one here, and it went down significantly in 2003, lost a lot of its value, and then bounced back a little bit in 2004. Now, a lot of people, when it started to go way above, looking at 2005 here, it's gone up by about 50-60%, which is when most people will be selling. If you say to yourself, "Oh, it's hit that mark," then you might think about selling. If you get up to about 2006, it's gone up quite significantly from the low. Even if you bought it here, you're looking at again, it's gone up by a lot. What happens a year later? Well, as you can see, it's definitely more than doubled here. Can it still go up? Yes, it can. You know, there are times where it's going down about once a year. In every year it's going down. I mean, I don't look at trends like that, but it is going down as well. But the overall trend is it keeps going up. You know, and by this time, it's gone up by at least 5 times. And then, you know, obviously in the recession of 2007, 2008, there's been loads of ups and downs where people think, you know, what's going to happen. You could have bought it then, but look what's happening in recent years. Whoa, just like boom. In the last 3 years, it's doubled. Who is it? McDonald's. Now, this is 2 things here. Don't sell just because the stock's going up. Don't sell just because you've hit a price, which I guess they're kind of linked. But lastly, just because they're big doesn't mean they can't get any bigger. This is the biggest fast food chain in the world. It's low that when I was talking about in 2003, it was selling for about, I don't know what that is, $13. It's now gone up to over $100. And I don't know what's going to happen in the future, but as you can see, it hasn't been a smooth trail up. It's gone up and down a little bit, but it has continued to go up. And just because it's a big stock doesn't mean that it's going to fail. Sorry, you got my face in there. Let's just swivel back to the board. So they're the kind of main reasons there. Stock has gone up. You shouldn't sell because of that. Hit my target price. Don't sell because of that. Don't sell because the PE is too high. Macro, you shouldn't really worry about that as the only factor for selling. And directors are selling. You definitely shouldn't sell just because they are. And lastly, you can't go any higher. The answer is stocks can go higher, and they often do if they're a good company. So there we go, get me a frame. So I hope you've liked this. If you can comment, like and share, that would be fantastic. And subscribe as well if you like my content. I also write a blog called Ways to Fatten Your Wallet, and there's more information on the blog. Ways to Fatten Your Wallet.blogspot.com. Thanks. Okay, take care.